What is going on, everybody? Welcome back to the channel. And in today's video, I want to sit down and take a look at Bitcoin and where we sit within the 4-year cycle. And I want to let you guys know what I think the remainder of this bear market might look like up until the next halving, which we will talk about when that is going to happen. This way, I can help you guys estimate not only how much longer we have to wait until those millionaire bull market gains, but also let you guys know how much longer we have to accumulate all of our favorite altcoins and Bitcoin so that when the bull market does come, we are set up in the best situation possible to make a ton of money. And last but not least, I want to give you guys the 5 reasons why I am actually super bullish on Bitcoin and the fact that the bottom is likely in at $15,500, give or take, because there's some things popping up right now, not only just on the price action, but also on a lot of the indicators that could be indicating that we are coming up to the end of this bear market. So without further ado, let's go ahead and jump into the chart, take a look at these 5 bullish signals, talk about how much we have to wait until you're all getting rich in the bull market, and also let you know kind of what I think the rest of the bear market's gonna wind up looking like. Let's get into it. So guys, here we are on the Bitcoin weekly chart, and first off, I kind of just want to take a look at where we are sitting in the 4-year cycle, and I want to talk about reason number 1 that I'm super bullish on Bitcoin going into next year and eventually 2025, and it all starts with the 4-year cycle. Now, this is my cycle chart. I have shown this in the Discords and on other people's shows, and we've dug into this chart quite a few times on my channel as we have assessed where we've been sitting in the cycle many times on this channel. But at this point, guys, I do just want to take a look at kind of where we're sitting, and I want to show you some of these measurements that are actually winding up to be very, very interesting. And all we're looking at here, guys, is essentially each 4-year cycle. We have one 4-year cycle right here, and then we have the 2016-2017 cycle all the way here, and then we have our current cycle coming in right here, which is pretty obvious because we're all very familiar with all of this price action. Now, I want to focus on 2 measurements specifically in this video, and that is going to be the distance between the halving and the bottom of each cycle, as well as the distance between the all-time high of each bull market and the all-time low of each bear market. And when you start to look at these previous cycles and compare them to our current cycle, things start to get very interesting. So, guys, I want to take you all the way back here to the bottom of the bear market in 2015, and the first measurement we're going to look at is right here, and that is the distance between the halving and the bottom of the bear market. So we had the halving right here kick off the bull market. We went all the way up to our all-time high right here at about $1,200, and then we came all the way down into the bear market of 2015, and that wound up taking about 777 days. Now, this might not sound that interesting until you start to look at the next cycle, which was the 2016-2017 bull market. Now, the distance between that halving and the bottom of the 2018 bear market is actually 882 days, almost exactly 100 days more than the previous cycle. Now, if we come on over to our current cycle here, you can see that if you are assuming that our bottom did come in here in November of 2022 at around $15,500, give or take some dollars, depending on which exchange you're looking at. But from the halving back here in 2020, all the way to the bottom of this bear market, obviously assuming this is the bottom of the bear market, it took about 924 days. Pretty interesting when you're looking at these previous cycles coming in at 882 days and 777 days. Now, it's not dead on exactly 100 days more than the previous cycle, but just the fact that we had a similar amount of days pass from the halving to the bottom of each bear market, again being 777, 882, and 924. This is really interesting because, in my opinion, this does show that there has at least been enough time that has gone by from our halving all the way to the bottom for an entire bull market and bear market to play out, and we may be in the accumulation zone before our next bull market. Now, the second measurement I want to take a look at with you guys is going to be how long it took for the bottom to come in after the all-time high. Now, if you take a look back here in 2013, where we topped out at about $1,200, you can see from the all-time high all the way to the bottom of the bear market took about 413 days. Coming on over to the 2016-2017 bull market, from the all-time high to the bottom actually took 364 days. Not the exact same amount of days, but pretty similar to 413. But the eerie part has yet to come, because if you come on over to our current cycle and you consider 69,000 the actual all-time high of this cycle, if you measure that all-time high all the way to 15,500, which again is currently the bottom of this bear market, it comes in at exactly 364 days, just like it did in 2017. Now, it's not about expecting price to do the exact same thing as previous cycles, but as you guys know, the saying goes, history doesn't always repeat itself, but it oftentimes will rhyme. Now, in this case, the 364 days is an exact repeat if this is the actual bottom of the bear market, but the thing that I'm really looking at here is the fact that enough time has gone by for a full bear market to play out, and $15,500 is looking more and more likely that the bottom is actually in for Bitcoin. But I've already made a video about that. We've been talking about that. This video is going to be different because I want to talk about what the rest of the bear market is likely to look like. But just by looking at the timing of the 4-year cycles, it does look like indeed we could be wrapping up this bear market and we could be right on schedule for the 4-year cycle. And you know what they say? If it ain't broke, don't fix it. So, reason number one, I'm mega bullish on Bitcoin right now going into 2024 and 2025 is going to be that from a timing perspective and a 4-year cycle perspective, it is likely this bear market is coming to an end. Now, I also have some pretty interesting things marked out on this chart, such as the 2017 all-time high. And if we actually go ahead and zoom into the price action here, you can see this white line is the 2017 all-time high. And not only did we break down, but when we bounced, we actually ripped back up, and we have perfectly come and retested that previous all-time high with this mega bullish wick here. We broke above the all-time high, which was bullish in itself, and then we finally came back to retest it. And I mean, that wick really could not be any prettier. And again, that is a bullish hammer candle, which was indicating that we would likely see a continued move to the upside. So even when you're looking at certain levels of support and resistance, this would be a very key level that you would want to flip from resistance to support. And the fact that we did that right here is definitely a point for the bulls. Now, on top of that, guys, if you come back to the previous cycles, you can see that we typically wind up getting rejected from this golden pocket, which is the macro golden pocket, and then we dip and get snagged up below this 786 for a very short period of time before snapping back up, again, putting in the bottom of the bear market, snapping back up above this, and then entering the accumulation zone before the next halving and following bull run. You can see this actually even happened back here where we topped out, got a big drop, got snagged up below this 786 for a little while we were putting in the bottom of the bear market, and then boom, we snapped above it, the halving happened, and then it was off into the bull run. Now, if you come over to our current price action, you can see that we actually lost this golden pocket, rejected it, and we did wind up doing something very similar where we got snagged up below the 786, put in the bottom of the bear market, assuming this is the bear market bottom, and then we ripped up above, and we could be entering this accumulation phase before the next halving, which is this yellow line, and likely that will be where the bull run will start. Now, from a price action, support and resistance perspective, and a cycle perspective, things are actually looking like they're right on track. But now let's go ahead and take a look at some indicators, which are also giving us some absolutely beautiful confluence. And first off, I want to go ahead and take a look at Market Cipher B. Now, I'm going to run through this really quickly. I've gone over this on my live streams before, but basically what I'm looking at here is the money flow on Market Cipher B, and I've actually made videos talking about the best time to buy Bitcoin on my channel at the beginning of the bear market, and in those videos, we talked about how the best time to buy Bitcoin historically historically has been when market cipher B has entered into the red with the money flow on the weekly time frame. And I'm just going to go ahead and quickly circle these areas. You can see it right here back in 2015. Market cipher B came into the red with the money flow, happened again here in 2018, and now here we are again back in the red with the money flow. Now, if we go ahead and see how this lines up, you can see if I put a line at the beginning and the end of this money flow, I will do this for each cycle. You'll see how effective this strategy would have been. And you can see right here, while we were in the red in the money flow, you would have essentially been accumulating the bottom of the bear market. And then in 2018, you essentially would have been accumulating the bottom of the bear market once again, while market cipher B was in the red with money flow. And then in our current cycle, guys, if you were buying this red money flow, you essentially would have been accumulating the bottom of the bear market once again. Now, are we going to see this play out the same way we saw it play out in these other cycles? Well, I can't guarantee that, but it does seem that history does like to rhyme. And not only that, but you guys can see back here in 2018, we went from the red money flow back into the green, faked out into the green when we got this little fake out bull rally, and then we came back into the red as we entered into the March 2020 scam wick here, and then finally crossing over into the green to start our bull run. And you can see here we actually got faked out into the green just slightly here before entering back into the red. But if this money flow starts working its way back up towards the zero line, I do think that next crossover into the green might indeed be the crossover that gives us that halving and the next bull run. In other words, we seem to be right on schedule. Now, this one I won't harp on too much because I talk about it all the time on my channel, and that's simply going to be the 200-week moving average. Now, obviously, we have bottomed out in previous bear markets right at this level. You can see back here in 2015, we bottomed out here a few times before moving back up. 2017, you get the all-time high. We bottom out right on the 200-week, and you can even see here, we actually lost it one more time during that Black Swan event in March of 2020. I think you guys know what was going on then. But we quickly recovered and held it as support before coming up into the next bull run. Nothing like scaring everybody out of their hodl positions right before launching into another bull market. So be careful if they wind up doing something like that again. But you can see here, we actually wound up losing the 200-week moving average decisively here in our current cycle, bearishly retested, hung out down here for a pretty long time, and then finally cracked back above this. But the reason this is part of a bullish puzzle piece for me is because currently we have actually gotten a rip above this level, and we have actually come down and bullishly retested the 200-week. And if we're able to hold it, we may be able to hang out up here, basically meaning that most of the pain of this bear market is likely behind us. Now, the last two things I do want to go over with you guys are going to be indicator based, and number one is going to be on market cipher A. And it's specifically going to be looking at these EMA ribbons. And if you don't know what this is, it's basically just a bunch of moving averages that essentially act as support when you're above them and resistance when you're below them. Now, on Market Cipher, what it does is these EMA ribbons will actually light up when you're in a bullish trend. And then when you enter a more bearish trend, you will get stuck underneath the ribbon and they will turn gray. Now, you can see this is very consistent. You come up to the top of a bull market, you start to break down, and as the trend continues down, they flip gray, you enter the bear market, you bottom out, then you get a pump above all the moving averages, it flips back to white and blue or lit up, and then you wind up entering a parabolic bull run. You top out, come into the bear market, they flip gray, you bottom out, you break back up, and then they light up again, and you enter your uptrend. Obviously, with the exception of this Black Swan event. But looking back in history, every time we go from spending some time with the gray EMA ribbon and it lights back up, that is essentially saying the bottom is in, the bear market's over, and we are likely going to enter a parabolic bull run. Now, I'm not expecting the bull run to come tomorrow or the next day or even next month or even in the next 6 months, but what this is potentially pointing at, as you can see, when we entered this bull run, the EMA ribbons lit up, we rode it up to the top, we even stayed highlighted through this massive dip during the bull market, and then we wound up coming down. The EMAs flipped gray. We had the infamous weekly blood diamond, and then we had the massive capitulations. The EMA ribbons turned gray. We got stuck underneath them for quite a while, but guys, we have just flipped them back to white and blue, indicating that the uptrend might start to continue. And again, historically, every time we got stuck under them and they turned gray and then they lit back up blue, the bear market was over and we were entering the accumulation phase before the parabolic bull run. Same thing here. We lit back up, you came in, accumulation, and then bang. And on top of this, guys, if we take a look at Lux Algo on the weekly time frame, you can see that once the bear markets were over in any of these cycles, you could see obviously here in 2013, we topped out again at about $1,200, came down, the bottom came in for the bear market, we accumulated sideways just a bit, and then we got a buy signal on the weekly. And as you can see, these buy signals are not very common. They only pop up at the end of bear markets. And you can see here we did get the buy signal right after we bottomed out. We kind of pulled a double bottom here. Then we broke out, got the buy signal, and then it was basically accumulation and then game on. In 2017, you top out, come to the bottom, a little bit of accumulation down here. You break out, buy signal on Lux Algo, and then you come up and then you enter another accumulation phase. But again, once that buy signal popped up, the bottom was in, and it was essentially the continuation of accumulation and then off into another bull run. And you guessed it, if you go ahead and pull up our current price action here, you can see the exact same thing happening where we top out here at 69K, enter the bear market, put in the bottom, break out, retest the previous all-time high, and then pull that buy signal on Lux Algo and then get another move to the upside. And then it is likely going to wind up being an accumulation zone and then off into the parabolic bull run. Now, if I pull back up the cycle chart here, I want to talk about, before I let you guys go, kind of what I expect the rest of the bear market to look like. Now, there's no guarantees here, guys. I could be wrong in my assumptions, but it's all about looking at multiple things like we did in this video and then making your trading decisions based off of multiple things pointing in the right direction. Now, I would be somewhat comparing the area of the cycle that we're in right now to somewhere within this bear market rally of 2019, right before we kind of got really, really boring here, other than this panic wick down for the March 2020 dump until the halving and then parabolic bull run. This was essentially more or less a pretty boring time, right? We were essentially stuck in this range for almost a year. So before finally hitting that halving and then taking off into the bull run. And as you guys can see here, the next Bitcoin halving is estimated to be around April 26th. Essentially towards the end of April, which is very close to my birthday, but that's besides the fact. But guys, kind of what I would expect here is, obviously, if we do get another move up here, which is possible, because if you go ahead and measure this 2019 rally, we came up about 350%. And currently right now, although I would expect a little bit less of a pump due to logarithmic regression and diminished returns, but we are actually only up about 100% up at the 31K level. So we could easily see Bitcoin continue up a little bit higher, and kind of my biggest, most bullish prediction for a continued rally, if we are just going to cool off here and get another move up on the very, very high end, I would look for a potential 48 to 50K Bitcoin to come up and test our macro golden pocket, coming in between 48 and 50K. And then that is where I would be cautious of a very, very heavy turnaround before coming back down and revisiting some of these lower levels before finally entering the halving and starting a new bull run. Now, if we do not wind up getting that next big move to the upside to about 48 to 50K, which I know does sound crazy, guys, but even if we got up to 50K, it would be an even less of a pump than what we got in 2019, because that would put Bitcoin in this cycle at about a 200% increase, where in 2019 this was 350. So it is not impossible. I know it sounds crazy, but it is not impossible to get all the way up there, but it doesn't guarantee that we will. Whether we get that second move up or not is another story, but I would expect the rest of this bear market to be somewhat boring unless we get some kind of black swan. Kind of what I'm expecting is either a shot up to visit that macro golden pocket at about 48 to 50K and then just kind of range around, maybe get some dips until the halving, and then that's where the bull run will start. Or we may actually be entering the boring phase right now, and we might wind up kind of just ranging up around these prices until we wind up getting into the halving. and then again starting that parabolic bull run. But either way, guys, whether we get that shot up to 50K in the short term, which we cover the short-term stuff on this channel every single day, so if you're interested in keeping up with the short-term moves, definitely hit that subscribe button and click the notification bell so you don't miss any urgent market updates. But whether we get that move up or down doesn't really matter, because at the end of the day, all I see is the light at the end of the tunnel, because we're only about 200 days and change away from the next halving, and that is likely when that millionaire-making bull run is going to start melting faces. So, guys, I think that's all the time I got for today's video. I hope you guys found that insightful, and looking at all these different things pointing to the bear market basically coming to an end here. Now, again, I think we do have some pain, aka boring days ahead of us, but I think the face melting dumps are basically over. Now, you got to be prepared in any direction. Bitcoin is Bitcoin, and, you know, I know there's a lot of smart people calling for 10K, so I don't want to get it twisted. That is not completely out of the question, but if you're asking me for my personal opinion, I think it is much more likely than not that the bottom is in, most of the pain is over, and we're probably entering somewhat of a boring accumulation phase before we hit that halving coming up in the late April, before getting those millionaire-making gains. So, guys, thanks for watching the video. I appreciate everybody out here. Don't forget to hit that subscribe button. And with all that being said, that's all the time I got for today's video. I'll see you in the next one. Frankie Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, here we go. Yeah, we winning by a landslide. Never see me coming on my landmine. Yeah, I ain't taking orders in command, like, yeah, you about to see me on demand.